To say we haven't done it again, it is an understatement. About a month and a half ago, we recommended the commodity Palladium. We told you the price was going to pull back on that day. And just off that recommendation alone, we achieved a 24% gain on the ETF, 150% on the futures contract, and 350% gains on options. If you look at the video a month and a half ago called Our Next Stock Recommendation, Surprise Choice Using the Stock Cycle Strategy, we specifically provided you with all the data. We were right because we follow a system and we encourage you to develop your own system. This video today will go over what's next for Palladium, the reasons why we believe this will happen, what's next for commodities, what is next for the stock market, and what to watch in earnings. Hello, investors and traders. Over the last 3 years of having this YouTube channel, we've built a strong trust with our subscribers. On this channel, it's all about investing, trading, and achieving success in the stock market. I don't sell you anything. Instead, I encourage you to build your own system. For the past 2 years, we've been advising you to buy in the pullbacks, and we've been spot on. In 2022, however, we were telling you to short the market and buy commodities. In fact, the running joke back then was buy lean hogs, buy orange juice, buy wheat, and they would outperform such stocks like Nvidia, Microsoft, and Amazon. That was in 2022. In 2023 and 2024, specifically on January 18th, we were telling you to buy Nvidia, Microsoft, Amazon. While this bull market isn't over yet, it's nearing its end. Before the last bull market concluded, we observed commodities starting to rise even as broader markets decline, signaling that smart money might be shifting towards commodities. Now, we're possibly witnessing the beginning of another commodity surge. This movement could last 6 months or just 1 or 2 months. We might be a little earlier than expected, but specifically, one commodity is really doing well. I still see Palladium going higher, following a controlled pullback. With this outlook, and our huge gains for the last month and a half, I took 75% of my position off the table on Friday. I'll be watching for potential pullbacks to re-enter, though there's a chance we may not see one. Usually, when we see such a move like this, we don't get a potential to buy on a controlled pullback. This just goes up higher sometimes. You should not chase this if you were not involved in commodity since a month and a half ago. But because we have a lot of built-in gains. Before we get started, here's a quick disclaimer. The information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. Remember, we're not selling you anything. I'm not asking for investment money or telling you to click on anything. I'm not selling you a newsletter, a program, a software. I am not even selling you a magical box. You really need to build your own system. And following anyone blindly is not a smart move. But this channel can give you advice. This channel can tell you how I run my system, which indicators that I use. And anyone who has been listening for the last 3 years knows how good we are. Remember, there are 4 phases to every stock: accumulation phase, growth phase, distribution phase, and declining phase. A stock cycle is a typical evolution of a stock price from an early uptrend to price highs through to a downtrend and price lows. There are 4 phases of a stock cycle: accumulation, markup, distribution, and markdown. How a cycle works. Prices may appear random, but they are repeating price cycles that are predominantly driven by the participation of large financial institutions. As a result, following cash flows reason to originate from these large players can be identified as occurring cyclical manners. The stock cycle has an expansion and traction periods, much like the economic cycle. It can be used for portfolio management allocation, allowing for increased investments during the accumulation and markup phases and profit taking during the distribution and markdown phases. Investors measure a stock cycle by comparing the distance between the lows to help determine where the prices are in the current cycle. To understand the cycle phases, you must understand there is what's called an accumulation phase, a basing phase, and then it explodes to a growth phase, to a topping distribution phase, and then to a declining phase. Accumulation, there's usually big institutions starting to build big bases, where the growth phase is momentum investors make bulk of their gains where the stock goes up higher. Then we run into a distribution phase where they're unwinding their positions at this stage. Price action begins to move sideways as the bulls and bears fight for control. And then there's the declining phase. Volatility often increases during this phase as investors rush to liquidate their positions. Investors use temporary retracements to the upside as an opportunity. So let's talk about this in today's market. If you look at Palladium, for the last year, it was in an accumulation phase, a basing phase, where nothing was really happening, just trading in a certain range. If you look at the stock market for the last 2 years, we were in what's called a growth phase, and now we're starting a distribution phase. A distribution phase is that we might be seeing highs, but a lot of the stocks are not showing that, where it's not an even distribution of companies going up higher. And a few companies are holding us up. Remember, the institutions need to put their money someplace. And if we're going into what we think is a sell-off next year, not a dramatic sell-off, not a economic doomsday, but just a healthy pullback, which will lead to a declining phase. And then in the next 1 year to see again the growth phase. Thus saying that we are not shorting into the stock market right now. What we are looking for is companies that are breaking out, heading into the growth phase, which leads us to Palladium. If you look at Palladium, we saw this stock break out of its base on volume. We did not jump in when it was at 100. And even if you did, you're still up 10% from that point when we said wait for a pullback to 90 to 95. Just as we predicted, it pulled back exactly 90 to 95 and it sat for 3 weeks. It went up, down, and for the last 2 trading days, it has gone up close to 23%. So if you look at this on a stock cycle, from Q1 2022, which we again made money off Palladium and commodities, it went through a declining phase, a huge declining phase for over a year. Then it went through a basing phase, and now it's starting to go to a growth phase. As we told you a month and a half ago, if this thing breaks out, it really has a lot of room to run. And this is what we're expecting. Thus saying that commodities are very dangerous. You're dealing in the futures market, which time value of money plays. This is not like you're dealing with a security or stock. There's multiple factors that deal with commodities. And even the ETFs that you deal with are dealing with the future market itself. So they have higher expenses. Thus saying that sometimes we recommend to find companies in the Palladium industry, companies, and do not do the futures market. But thus that we are doing the futures market. If you look back on September 30th of this year, we came out with a video telling you to buy on a pullback at 90. We bought it at 90.1. As the current price on Friday, it is 111, just off the ETF with 23%. And we're telling you, we do the future market and options off this. This was a major gain for us. It does not only stop there. Why do we look into this? If you look at the sector itself, many metals, many of these companies are headed higher. And so the sector itself. So when we look at the overall market and seeing the stock market is going through a distribution phase, where is Wall Street going to put their money? Where are the institutions going to put their money? We believe they're going to put their money into commodities. The first group of commodities that they're putting their money into, clearly it's been GLD gold for a long, long time, but we picked metals. The metal that was not gold that looked the best to us was palladium. And we were clearly right on this recommendation. There is no doubt in your mind that we nailed this one. The question is, what's going to happen next for palladium? The question is, what to do with palladium now? Short term, after this move, we took our profits, a lot of our profits. We left 25% of the position open. What we think will happen is a pullback. Now, sometimes on stocks moving like this, it does not get a pullback, and we get 1-2 more days of palladium going upwards, and then sort of a basing phase. But when I deal with the futures, I like to take my profits very quickly. And even if I leave a lot of money on the table, I'm okay with that. Something like NVIDIA, the way we wrote it up from 23 to 24, we let it run a lot. Now I am just looking for singles and maybe doubles with palladium, but I can clearly see this move up higher. So for right now, short term, I am neutral on palladium. Intermediate term, I am bullish, and long term, I am bullish. I'm looking to buy on pullbacks. Now, this pullback must be in orderly fashion, which all I'm thinking it's going to be. Now, if I look at the mining ETF and I look specifically at gold, we look to be in the right sector. So this is another thing. Not only is palladium looking to break out, palladium is in the right sector. But then if you look at the overall commodity index, I'm still not sold right now to jump in the overall commodity index. But of course, in metals, specifically palladium, I am. So let's go a little bit of what we look for. Is metals in a bull market? Just take a look at gold. That's all I have to say. Are we using oversold indicators to tell us when to get in? Absolutely. After an ETF going up 24%, chances we get a little pullback will happen. Is palladium cheap? Well, it kind of is cheap to compare to where it was, but still at 80, we were not looking at the bottom at the 80s to nail the bottom. We someplace got in at the 90s when we saw high volume in the right sector. Are we prioritizing uptrend? Absolutely. This looks like a rocket ship exploding. Do we have stop losses in play and also to keep our profits intact? I took 75% off the table. I have a lot of all profits have been made. Have I maintained consistency in every time I tell you to invest and not to invest? Of course, read the disclaimer. The answer is yes. We talked about the breakout point, and we talked that palladium was breaking out a month and a half ago, but we would come back, pull back, and then explode again. The probabilities were on our side because we were in a very good sector. Now is the time that we start continuation buying. The overbought, oversold is at 75. It's a neutral reading. Sometimes when the stock is so good, overbought and oversold oscillators do not work. I can tell you one thing. I wouldn't be shorting into the stock market now, and I definitely wouldn't be shorting into palladium, even though it has a nice 2-day move in this market. Again, if we look at the overbought, oversold on a short-term indicator, medium-term, and long-term, we are specifically to say that this is bearish. But what I've seen is when a stock looks this good, the overbought and oversold indicators do not work very well. That's why we use a weight of evidence. And again, if you look at the CCI commodity index, it's definitely telling us to take our profits. The question is what to do with the commodity index in itself. In 2022, we wrote up the commodity index and it was a rocket ship. We have gone over about 2 weeks ago and comparing the commodity index of 2022 to right now. And there are a lot of similarities. But for right now, we are just investing in the metals and we are looking every day and waiting for the other commodities to break out, just like the metals. So if you look back at the commodities in 2001, 2022, and we look what happened at that period of time, we're trying to see if it's going to happen again. And as of right now, I am not investing in the commodities whole, but I am monitoring and expecting a breakout. But in the metals industry right now, gold has been going up for a long while. And we're just looking at the other metals to ride the very powerful sector. So to answer the next question, what to do with the overall commodity index? Build a system around, see what moved in the year 2022 at the beginning into 2021, and see in 2024 and 2025, we don't mimic this. The next question is, what does our system tell us about the stock market? Nothing is 100%, but from the 3 years that we've been publishing videos, we've been dead accurate. I've been trading and investing 15 years off this same system, but nothing is perfect. But I'm going to still give you my opinion, which may not be a popular opinion, but I will still give you my opinion. For the last 2 years, we've been yelling, buy on the dips, buy on the dips. We are bullish, buy on the dips. Anytime there was a sell-off, we kept telling you to buy more. With earnings for the Magnificent Seven, every time there was earnings, we were telling you it doesn't make a difference how they report. Keep buying on the earnings. Now, suddenly, we're getting a little more cautious. We're up a lot of money the last 2 years, and we don't want to give it back. We feel there's still time the next 3 months that this market will go up higher or trade in a bullish stance, but that does not change. We are in what's called a distribution phase, and there will be companies that go up higher, and there will be companies that break out, but there'll just be as many companies that disappoint and go lower. Every time the QQQs sold off for 2 years, we've been buying. For the first time, we are selling 80% of our position off the QQQs, betting next year we will have a better price to get into. The other 20% we will probably sell off closer to the end of the year. But let me go over the reasoning why. It comes back to the beginning of the video of what we think is going to happen with commodities. If you look at October 2021 to June 2022, what happened to the commodities market? And then if you look at the QQQs from December 2021 to January 2022, what happened to it? This is what we're preparing for. Now, again, this is not going to be a popular answer. This is not going to be a popular thought. But at the end of 2022 into January 2022, we said the same thing. Thus saying that this does not have to happen. We're not always right. We're just preparing if it is right. The elections of the United States are happening November 5th. We think that will propel the market higher for 3 months, but sloppily, not the way it was going up the last 2 years. We are up 74% on our long-term position for the QQQs. On every dip, we bought more and more. And some of the dips and some of the rallies we sold off, but on every dip we kept buying. What am I going to do? I'm not ready to short into this market, especially not into a very favorable time in the market. I am looking for stocks that are breaking out, that have based and broke out. Individual companies we're looking for. There will be a pullback. I do not think this pullback will be a financial crisis, a huge major event. I just think we're overbought in this market and we need to spend some time oversold. And this is the million-dollar question, when we will get a real pullback in this market, like we had from 2021 to 2022. Will you have cash at that time to buy in? There's a lot of euphoria in the market now, even with wars, presidential elections. Again, we made a lot of money for us, and we're taking some chips off the table and saving cash. This is my long-term plan. I look at the top-down approach. I look at the overall bigger picture. Then I'm trying to find a trading edge to predict the market. I use high probability investing, and I'm consistent in the rules. This is a rule-based system, empirically, theoretically, and psychologically. One indicator does not make a strategy and should be coupled with other indicators and philosophies. I'm using a weight of evidence in figuring out the overall market, to the sectors, to the individual securities. This is a 3-part process which has probability of trading, strategy, and following moves. Short term, I am neutral on the stock market. Intermediate term, I am bullish. And long term, right now, I am neutral. I am using a data driven approach to maximize success. I am consistent, weight of evidence, rule based decision making, top down approach by using analytics and data driven insights and technical analysis. I focus on maximizing the probability of success in my trades and investments. I challenge you to build a system with your own set of rules that guide your decision making process. Be consistent. Right now, if you do the stage analysis of the S&P 500, it's pretty much split 50-50. The Nasdaq is a 46-54, pretty much 50-50. You know, on January 18, 2023, and for the last 2 years, we've been telling you to buy in all dips. Every single video that we've come out with on the QQQs for the last 2 years has been buy on the dips. I'm just taking chips off the table. This is long term. What we did off Nvidia, Meta, Amazon, Google, Magnificent Seven, buying on all the earnings. And then we go to the VIX. Again, very neutral readings, very ho-hum. Our short-term indicator is kind of bullish. We could have a short-term rally here, but it's not like it was. If you go down to the CCI indicator, again, very neutral readings. Overbought, oversold, short-term, medium-term, long-term, and ESIG swing signal, neutral readings. You go to the components, which usually works well in these type of markets, gives us a very neutral reading. So we're getting a lot of neutral readings up and down, which happens in a distribution where nothing is really happening. We've been a big component for the last 2 years of Magnificent Seven, specifically Nvidia, and we love them. There was also a trick we've been using the last 2 years, which we're not going to be using now. I also said what to do with earnings, specifically the Magnificent Seven. The trick we were using for the last 2 years, every time there was an earnings, we bought. No matter what the Magnificent Seven company was, we knew the QQQs would be higher. It would be led by the Magnificent Seven. So even if Apple or Nvidia disappointed, which they didn't, 3 months later or 4 months later, that security would be up higher. On this earning run, for the first time in 2 years, we did not play Tesla to the upside. And we will not be playing or investing or trading on any Magnificent Seven before the earnings. We feel right now we're topping out, and the earnings play that we were doing for the last 2 years, now it's just gambling. And we don't have an advantage. Either way, we don't have an advantage. We go further. The AAII market sentiment has spent close to a year in a bearish way. What's interesting is the put call option, there's a fear on the 5-day average put call ratio. On our RIDEX ratio, it's neutral and not giving us a sign. On the stock price strength, it's bullish. So what is next for us? It's the next 3 months getting more of a cash position, taking the hard work and the smart moves we've done for the last 2 years and collecting cash. It is also to find breakout companies for the next 3 months or breakout industries that meet our criteria. And in the following year, if it goes as planned, we will be shorting into the market. We're not shorting yet. We're not telling you to short the market. Nothing have we touched is short the market. Right now, we are looking to ride out the end of the year, collect cash, find a few good companies to ride out the end of the year, and to see what happens next year, if this distribution phase will happen. There'll be plenty of time to make money in the market. There's a big event coming November 5th, and there could be a trading opportunity for the next 3 months, which leads us to the intermediate term. There'll be a time to make a lot of money inside this market on the long side. Don't let swings of individual companies sway your mind or use your emotion. When the whole market falls, the majority of the companies will fall with it. We're spending our time deciding when this overbought pullback will happen and how long it will be. I thank you for the last 2 years in this bull market, and it's going to go a little bit further. You know the catchphrase. Study it, analyze it, adapt it. Peace.